Hey guys, in this video we're going to be analyzing Norfolk Southern Corporation. And this one is a little personal for me because I own some shares, or me and my wife, we own some shares of Norfolk Southern Corporation. And they've dropped a little recently. So we're trying to decide if we're going to hold on to them or let them go. So let's take a look at Norfolk Southern Corporation. Norfolk Southern Corporation is actually a railroad. And let's see how they've been doing over the last couple of years. We see when we look at our candlestick chart, every green candle is moving up, every red candle is moving down. So we see that going all the way until 98, we've seen some small green candles speckled in with a few red candles there, which means small moves. But from that time, 99 and 2000, they moved down a little. Then from there, we start to see some green candles moving up. We get to about, actually this year is buried. Let's see. This is 6, 7, 8, 9, 10. I guess this would be 11, 12. I guess this would be around 2013. That's when we start to see the sizable candles moving up. And now they've been moving up until, I think that would be 2021. And here we would have 22. They moved down sizably, almost to where they began in 21. And then here we are in 2023. They've moved down sizably again. As I've mentioned in previous videos, we are seeing a lot of fundamentally sound companies really moving down in this last year or the last couple of years. Something's going on with the economy, not sure what. Not sure if it's the fact that we're sort of on the outskirts of, but have these wars going on, one in the Ukraine. When I started to notice real changes in the market, it was with the combination of us being at around, at the time we were at about 7% inflation, and then the Ukraine war started. And things have been sort of unsteady since then. And now here we are with another war going on, basically you could call it, with Israel against Hamas, but basically Palestine. So I'm not sure if those are the factors affecting the economy or if it's the administration that's affecting the economy, the presidential administration, and things that people are fearing is going to happen with the economy. Maybe there's underlying things going on with the economy that I'm not aware of. But whatever the case is, this year, these last couple of years, we've been getting a lot of turbulence in the markets. A lot of very strong and fundamentally sound companies are moving down. And this can be an opportunity to get out of the market if you're in, but it could also be a very great opportunity to get into the market. Because if your favorite food goes on sale at the supermarket, what are you going to do? You're going to go down there and buy up as much as you can, as quick as you can. So that when the price rises back up, it doesn't matter because you already have enough to last you for a while. Well, what do you do when things hit those low prices in the stock market? Things that are going to put more money in your pocket because they increase in value over time. You stock up the same. You stock up on the good things while the prices are low. So here's your opportunity. So we're going to look at Norfolk Southern Corporation. They're a railroad. We're going to look at them in this episode. And if you ever want to know what a stock does, maybe you see a stock, but you don't really know what they do. One thing, you can go to YouTube and put in their name, see if there's any YouTube videos out there describing what they do. But also, if you go to Yahoo Finance, put in their ticker symbol, you can go to profile, and if you scroll down, it lets you know all kinds of information. This is their website. Here's their address of the headquarters. Here's their phone number. We have their sector, their industry. We have the key executives at the company: president, CEO, and director, vice president, etc. And if we scroll down a little further, here is a description of what they do. Norfolk Southern Corporation, together with its subsidiaries, engages in the rail transportation of raw materials. So it gives you a little description of what they do right here at Yahoo Finance. I'm sure there's other places you could find them on the internet as well, but that's where I look. Now, we are looking at the annual chart. Like we said, they've moved down the last 2 years. At a high, they were above 282. But now they're down to 196. Let's look at them on a weekly chart and see what they've been doing on a smaller time scale. So now each candle represents a week. And we notice they've been up and down. In December of 21, where were they at about? They was at about above 287. And currently they're at 196. I believe it's 196.24. Yeah, currently they're at 196.24. So now that we've seen a little bit of the price movements of this stock on our candlestick charts, let's delve into the fundamentals and get a closer look at the price movements when we go over to our spreadsheet and do our analysis. Okay, so now that we've gone over the technicals, the candlestick chart for Norfolk Southern Corporation, let's look at some of the fundamentals. And let's start with the numbers, with the prices, I should say. We see that if we look at the earnings per share, with Norfolk Southern. 2018, it was $9.51 a share. 2019, it was $10.25 a share. In 2020, which was our COVID year, it dropped down to $7.84 a share. But in 2021, it jumped back up to $12.11 a share. In 2022, it was $13.88 a share. And right now, well, I should say at the time of this analysis, it was $11.10 a share. But let's bear in mind that the year is not over yet. We're in October. We still have a couple of months to go. So this wouldn't be their final earnings per share for 2023. Let's see if it's showing the same on their website. Yeah, the earnings went up a little from 11.10 to 11.11. And the PE creeped up a little as well. So let's see what the price is. The price is at 196.24. So the price has dropped a little from the time of this analysis. But in any event, let's look at what we see concerning this stock. First, let's look at where the prices can go. We see that over the last 5 years, the low PEs were 12. I'm cutting off the end part, so I'm rounding up. They were at 12, 12, 14, 18, and 14. 12, 12, 14, 18, and 14. And right now it's at 17. So the low earnings per share each year was actually lower than it is right now, except for in 2021. Notice in 2021, the lowest it came to was 18.28, and then it stopped and moved back up. But right now, actually right now, at the time I analyzed this stock, PE was at 17.35, but right now it's at 17.66. It moved up a little. The question is it going to continue to move up, or is it going to go back down? Is it going to go down further? Now, let's say it went down further. And in 2020, it went to 14.17. Let's say this PE was to drop to 14.17. And we're going to multiply that by our earnings per share. I'm going to multiply it by the earnings per share at the time of analysis, not the current earnings per share, which is only about a penny less. So 14.17 times 11.10 equals 157.28. That means if this stock dropped to a PE of 157 to a PE of 14.17, the stock could potentially drop to 157.28. But if anybody were to buy this, I would hope you would jump out of it long before it drops all the way down there. If it continues to drop, if it's dropping for more than a week, get out, wait for it to start moving back up, and then buy it. Or you may find a different opportunity that's better. You buy into that. In any event, now that we've looked at how far it could potentially drop, now let's look at how high it can go up in these next 12 months just based on PE. So if we look at 2018, the low PE was 12. I'm rounding these off. I'm not counting the decimals. The low PE was 12. The high was 17. So that's a difference of 5. This year there's a difference of 6. This year there's a difference of 15, I believe. This year there's a difference of 5. And this year there's a difference of 6. So let's be conservative. Let's say there's a difference of 5. So our low PE was 17.35. That's the low PE that I'm aware of. We're going to add 5 to that. And that gives us 22.35. And we're going to multiply that by our earnings per share. So that's times 11.10. And what do we have? $248.08. So a conservative estimate just from my PE, price earnings analysis, tells me that this stock can move up to $248.08 per share from the price at the time of analysis, which was $201.35, or even from the current price, which is $196.24, because it's dropped a little since that time. But there's another way to get these estimates. If we're at Yahoo Finance and you put in the ticker symbol NSC, and under the summary tab, you scroll down to the bottom, it'll tell you in their estimates, they, from their analysis, feel that this stock will move up to $234.70 within the next 12 months. So mine's just based on PE, says $248.08. Theirs, based on whatever their criteria is for their analyzing it and saying what they feel it'll move up to, is $234.70. But that is where we see that the stock can go based on their estimate and based on my PE analysis. Now let's look at the company itself. Norfolk Southern Corporation, which we know is a railroad, in 2018, they made $11 billion, $11.4 billion to be more exact. 2019, $11.2 billion, they dropped a little. 2020, $9.7 billion, they dropped a little bit more. $2 billion is not a small amount, so dropping $2 billion isn't a small amount, but $9.7 billion is still some decent money, so I'm not going to sneeze at it. And that was our COVID lockdown year. 2021, back on track, $11.1 billion. And 2022, they increased $12.7 billion. So now that we've seen how much money they made in those years in their overall sales or revenue, let's look at what their net income was. In other words, after they paid all of their expenses, how much did they have left over in terms of profit? In 2018, it was $2.6 billion. 2019, it was $2.7 billion. 2020, it was $2 billion. 2021, it was $3 billion. And in 2022, it was $3.2 billion. And what percentage, in terms of the profit that they kept, what percentage was that of the overall money they made that year? 23.22% in 2018, 24.5% in 2019, 24.05% in 2019, 20.53%. It dropped a little in 2020, but not much. 26%, 26.95% in 2021, and 25.64% in 2022. So, when we look at the money that they're making overall, and then we look at the money that they're able to retain in terms of profit after paying all expenses, we're dealing with some pretty decent margins. They're keeping 20 to 26% of their money year over year in terms of profit margin. Now let's look at the return on equity. That's the return on the shareholders' ownership. What's our returns on equity? Well, in 2018, it was 17.32%. 2019, it was 17.89%. In 2020, it dropped a little, 13.59%. But 2021, they recovered, not just at 17%, but they jumped up 22.01%. And 2022 was even higher, 25.67%. Now, if we look at these years, not only is their ROE, their return on equity, increasing every year, but so is their debt to equity, the actual debt that they have. So in 2018, it was 135%. 2019, it was 149%. 2020, it was 156%. 2021, it was 182%. And in 2022, it was 205%. Now, return on equity can get skewed a little bit when the debt to equity crosses that 200% threshold. And we see in 2022, it's up to 205. So it's possible that the return on equity in 2022 is not really 25%. Maybe it's a little lower. But even if it's around that 22%, which it was in 21, that's still decent for a return on equity. Speaking of debt, let's move down to our balance sheet. And we see that with our balance sheet, in 4 of the 5 years, their current liabilities, that means their short-term debts, exceeded or was more than their short-term assets. All of the 5 years, the only year where it didn't exceed it was in 2020. But their total assets was more than their total liabilities each year. Not a great amount more, but they were more. And if I would look at this balance sheet, I would consider it a okay balance sheet, a passable balance sheet. I wouldn't consider it a great or even good balance sheet. I would just say it's okay, it's passable to me. We see they give a dividend. In 2018, it was 844 million. 2019, 994 million. 2020, 960 million. 2021, they gave $1 billion. And 2022, 1,100 million. So they are paying a dividend to their shareholders. That's something we like to see. And we also like to see them buying back shares of their own stock every year, which they did. They spent $2.7 billion in 2018, $2 billion in 2019, $1.3 billion in 2020, $3.3 billion in 2021, and $3.1 billion in 2022. Now, next we're going to jump down to free cash flow. We already looked at the income statement above, and our numbers look decent for the income statement. The only problem with that is that for an income statement, there's sometimes some work that the accountant can do to make things look a little bit as if they're, how can I say it? They can make things look the way they really aren't in the income statement by messing with some things like depreciation and so forth. But free cash flow, that's the money the company has at the end of the year. That's not played with. That's more so that's the money you have. So I like to look at the free cash flow next to the income statement. So we have this down here. Their income in 2018, 2.6 billion, free cash flow 1.9 billion. Income 2.7 billion, free cash flow 2.2 billion. Income in 2020 is 2 billion. Free cash flow is actually more, 2.4 billion. You wonder how that happens? Well, the company may have some free cash flow from a previous year that carries over into the new year. And that's how the free cash flow can end up being more than the net income. And then we have free cash flow in 21 and 22, but it's not more than the net income. But the other thing I like to look at is after they have their free cash flow, a lot of times the company may pay us as shareholders from that cash flow. Remember above I was reading the figure of how much they was paying in dividends? Well, they take that money from the free cash flow. So the question is, are they taking the money from the free cash flow, which is a healthy thing, or are they borrowing money to pay us our dividend? Now, you may say, well, it doesn't matter to me. I don't care how they get the money to pay us the dividend. But the problem is, if they're borrowing the money to pay you the dividend, and you intend on owning this stock for a little while, what if they have to stop paying dividends because they don't have the money anymore? Whereas if they're getting the money to pay us the dividends from their free cash flow, then we can feel more confident that that dividend is going to continue. So, Norfolk Southern, after paying us the dividends, still had 1.1 billion in free cash flow in 2018, 1.3 billion in 2019, 1.5 billion in 2020, 1.9 billion in 2021, and 1.3 billion in 2022. So they're making money, they have enough to pay us our dividends. And what type of dividend are they giving us? Well, at the time I analyzed this stock, the last dividend they paid was $1.35. But what we more so want to know is what percentage of that is what percentage of our stock that we bought are we receiving a dividend on? And so for every share of Norfolk Southern that you buy, they're paying you 2.75% back in dividends. I like a little higher, but that's decent. They're shares held by insiders, those who work for the company or are involved with the company, is 0.14%. That sounds like a very small amount, but that's 0.14% of 227 million shares. And shares by institutions, those are large banks and professional investors and so forth, 76.22%. Now, Mr. Alan H. Straw is the president, CEO, and director. He was appointed the president on December of 2021 and became CEO on May of 2022. But when we looked above, we said that the company, they sort of dropped back in 21. Well, actually, they dropped back in 2020. They were back on track in 2021, and they were even higher in 2022. They're only at 11.10 for the earnings per share right now, but the year isn't over yet. So if he took over in 21 and 22, things are running smoothly from that time. And Norfolk Southern Corporation is in the railroads industry. It's one of the largest railroads by revenue in the world. Okay, guys. I believe our next video up that we will be looking into is PepsiCo. So I look forward to speaking to you guys in the next video. Have a great night.